At SPY at 650. The grind today is very real as we are looking at all-time highs. Volatility continues to subside, and I'm looking at Trader Oasis here to get some of the intraday look at a few of the big items I'm watching right now. Number one, S&P continuing to push. This is pretty impressive stuff. I think in particular, if you zoom out, just looking at the last 90 days, this is a chart that just goes up and to the right. I mean, it's an absolutely beautiful trend here. How can you not love it? The fact that we continue to make higher lows, higher highs, just a real smooth grind. Just like we talked about with Brent Kochuba over the last 2 days, the fact that we didn't need much, just not a blow up, and it worked. NVIDIA continuing to be a force for the market, even when it's down. The fact that it wasn't a major hit and the fact that all the moves stayed within the expected ranges. The chart for NVIDIA with a big candle, right, stuck in the middle at 180 right now in the range from the last 3 weeks. I think that's a perfectly fine outcome. And by the way, it's coming back. Maybe it closes positive on the day. So NVIDIA looking pretty decent, just below 181 now. That is a good improvement and a pretty good outcome considering this is still the horse for the AI trade. We looked at SMH as being a stronger chart, but one with potential for head and shoulders if you saw today break down and go the other way, but instead we're firming up. Here's the head, here's the left shoulder, and this one looks like it's stretching instead of breaking down. So I think that's a very good sign. The fact that you've got SMH now at $300, pushing pretty close to the recent highs, that's pretty great stuff. The fact that also you've got a few of the big juicy trades on the downside, like MicroStrategy, and the market's okay with it, that's pretty important too. Master down 1% and a continuing weakness, but the market doesn't mind. Look at Bitcoin and the IBIT. Also, just sitting here at 64. Bitcoin, not a lot of life in it over the last week, and that's okay too. I got Scott Bauer who's going to join me as we look at the intraday session here. You know, Scott, the fact that NVIDIA is trying to plug higher reminds me why my risk radar is still green on stocks, because it looks like this thing is just a horse. Even when it doesn't rally, the market is happy that it just didn't break down.
That's exactly right. That was probably the worst case for the market, is that the expectations were too high. They didn't meet them, and we saw a big breakdown. And we didn't see that. Even if we had traded down and stabilized around the lows after session last night, 172, that also wouldn't have been so bad. That, the expectations were so high, and this stock has been on such a run. But the fact that we're hovering near the flat line ish or so, that is really bullish for the overall market, because something we talked about yesterday, Oliver, and all the S&P 500 stocks, there's 35% of them that are tied somehow to the AI trade. So with NVIDIA, reconfirming guidance and the numbers actually looking really solid here, that sets up, that this AI trade should continue.
Yeah. SMH better looking than NVIDIA generally. So that holding on, I think, is, the bedrock effectively of the tech trade. That, is now at this point as reliable as ever. It kind of had that
Sure
look like
is.
potentially it could go head and shoulders, but it didn't. So there's really not much to complain about here. VIX down 2. Hopefully tomorrow doesn't give some hot print, but taking you heard from Jared Dillon earlier, there's not a lot of whole reason to worry about a super hot print at this point. What do you think?
Well, I agree with that, but that could also be the thing that really affects the market. I mean, all signs point to inflation, stabilizing. I'm not going to say coming down, but stabilizing a bit. So I would say the odds of a hot print are not real high. But listen, with volatility just absolutely, and I'm going to use the word plummeting. It really is. And yes, we're going into a long holiday weekend, but with vol down here, if I had long positions in the marketplace, even going into this long weekend, you bet I would be hedging it somewhat with either some upside VIX calls, some downside puts in the Qs or the S&Ps. Just too cheap not to lock in or take some of that protection right now.
Yeah, that's important. I'm going to pull up my risk radar, just kind of show what I've been thinking lately, which is strength in stocks, strength in gold as well, which has been on the outer rim of green.
Yep.
The dollar, which I kind of shifted potentially more to the green side. Maybe I need to rethink that because the
Yeah.
dollar hit today. But bonds have been solid yellow. And with inflation tomorrow, I thought maybe we talk about dollar and bonds for a sec because, Scott, for the most part, these have been right in the middle of the range for me,
Sure have.
representing essentially range bound. And I haven't really been able to discern any direction so far in either of these. Tell me what you're thinking for those.
We are still in the middle, and it's tough to really think about direction given still all of the question marks about rates. With 25 bips reduction that is priced into the market right now, that's priced into what we're seeing in bonds and the dollar. So with PCE tomorrow, jobs number next week, those are the two big data points that could really move the needle on either one of those. But looking at the charts, like you said, we're right in the middle here. Intuitively, I would say rates are probably going to come down a little bit further because I don't expect a real hot print tomorrow. What happens next week with the jobs report, we'll have to reevaluate till then.
Yeah. Jobs, I think, could be interesting for bonds. Overall, though, it just looks like a market that continues to have give and take. And I can see that because if you ask anybody, they're going to give you, there's like a 50% chance. I mean, I think it's starting to skew to people generally being more dovish in their interpretation of what Powell said after Jackson
Sure.
Hole. But even a lot of people who are dovish will say, oh, he doesn't really need to. He's being pressured to. So that kind of lack of conviction, I feel like, is, by the way, the sweet spot for bonds as far as risk assets are concerned. I think dollar yellow, bonds yellow, range bound for both. It's kind of what you want to root for if you're long risk assets.
Oh, that's a great scenario. Absolutely. And then, throw in what we saw out of NVDA, and boy, oh boy, that threesome right there. You're right. I mean, there's no reason, to believe that the market is going to have any sort of significant pullback right now.
Yeah. All right. One thing that's had a pullback, Mr. Bauer, this is where the Trading Academy part comes in.
Yes.
I need a little help, all right? Because everybody knows I've been short master. I had it paired with a long Bitcoin trade, but I started to pull back some of the long Bitcoin side because master was looking so weak. And so I've been in this trade. I've been in a pretty good position on this trade, but I actually did it via a long put calendar where I was short the shorter term puts because I didn't think master was going to break down quite as fast as it did. So I'm still making money on days where master is down, but my strike at 350 that I was short already went through. So it's like I'm barely like squeezing out gains now. I'm trying to figure out what I should do with this position. What do you think?
So that 350 put that you're short for next week still has a lot of premium. It's still got about $5 of premium in it. So it really depends on your outlook, Oliver. When you got into this position, this trade, that was awesome because you were buying time, the September, December, and you were buying that time where master volatility was so incredibly cheap. Now, let me say something here, and I know you want to keep this short position on. When I took a little deeper look into master, the 50% retracement, 340, from the lows that we saw back in April, right around 235-ish, up to the highs that we just saw, 456, 457. That 50% retracement area right there around 340, that could be a pivot back to the upside a little bit.
Yeah.
Not a pivot meaning we're going back to all-time highs, but you would look at that as a significant area where you might see buyers here. So if you were still, if you still have the notion that you want to remain short, if it was me, I would look at those two puts that you have, one expiring next week, one expiring on the 12th. I would roll them down a little bit because you're still probably going to collect premium going out a couple weeks on either one of them. You'll have lower strikes that you won't really need to worry about for right now, and you'll collect some premium against what you had paid initially.
That's interesting because that's kind of what I was thinking is, all right, since I'm short the put that's underwater right now at the 350 that expires next week, or if this thing does find support, maybe I try and be a ninja and, let that then just expire. Maybe it bounces back above 350, expires worthless, then I just stick into my long position, my long put position.
Right.
But then
You
I
can
got to
do
get the
that.
timing. I got to hope that the timing just works out.
It's always a matter of timing. Now, being short that put that expires next week, that is actually huge going into the long weekend. You should see some significant premium decay, but obviously that really is dependent on what the stock does here. So I would look to roll those out, lower strikes, collect
Okay.
some premium, which you should be able to do even if you only go out a couple weeks to like the end of September. And then you've got this 3 month time spread on that is still really flexible for you.
Yeah, I like that because that's what it's about, really. And by the way, I had this paired with kind of the inverted calendar with BTC because I was thinking BTC was likely to be stronger short term, or sorry, weaker short term, longer. So I kind of
Right.
had it flipped as a way to
Nice
play them
pairs
off of
trade.
each other. Yeah, exactly. But then MicroStrategy just was starting to soften more significantly than Bitcoin. I gotta say, by the way, generally for Bitcoin, held up this week pretty good considering how things started on Monday.
Oh, it sure did. Seeing it here right at 112 or
Yeah,
so, after
yeah, not
trading all the
bad.
way down to 108.
Yeah,
Absolutely. I think that is a win for the bulls in the crypto market. I know you may have a
yeah.
different thesis on that. I think that's a win for the
No, it's
bulls.
no for sure. It looked like it could have gotten nasty this week. All right. Speaking of which, we closed it out. We were almost at the bell here, and S&Ps are going to end in pretty good shape at all-time highs. So
All-time highs, another new record here. And again, just more reason, Oliver, to get some, really, really cheap, inexpensive protection that you hope never comes into play, right? When we go buy insurance, whether it's homeowners insurance, car insurance, whatever it is, you want to buy it when you can and not when you're forced to, when, God forbid, an accident or a catastrophe strikes. So now's the
yeah.
time to do that.
All right. Bell's ringing up day. Got through it one more with inflation. Thanks, Coach Scott.